Welcome, welcome, everyone. This beautiful Thursday morning. It is super windy here in beautiful Philadelphia suburbs. It's really windy. It's like there's like 40-mile-per-hour gusts, which is absolutely nuts. But today we're going to be talking about some awesome stuff that's going on in the housing market. Or is it awesome? I don't know. I want to really focus on what a major CEO is saying about the housing market moving forward in 2025. And then we have some updated predictions about where the market's going to go in 2025, which is going to be fun to chat about as well. I have a couple charts to show you to see what's going to happen. I don't know. What do you think is going to happen in the housing market? That's a great question. I feel like I just talk and spout things out. But honestly, what are your thoughts about what's going to happen in the 2025 housing market, right? Because it doesn't necessarily matter what is happening right now. What matters is what's going to happen moving forward, right? Because we know what is happening right now with record low inventory, near 1995 total number of units sold for the entire year for the entire country, right? We're below 4 million total units sold, which is crazy. Didn't expect that. Interest rates are still on the higher side, although historically they are where they've been, but they're still on the higher side, right? Because we experienced years of record low rates, right? Record low rates. I have a 2.625 rate. It's so difficult to imagine giving something like that up, But that's the reality. A lot of people are in situations where they have these really low rates on their homes, and they know that when they sell it and buy, they're going to be buying much higher than where they're at, right? So we'll discuss a lot of that stuff. And I really am very, very, very intrigued about what the CEO of the largest new construction company in the US, the largest in the entire US, right? So we're going to get into that. I'm going to bring this up for you. I'm going to share my screen. I hope you're all doing well today on this beautiful Thursday, chilly, windy. Here we go. All right. So major home builder warns of a new housing problem. What else do we need, right? What else do we need to deal with it rather than a new housing problem? Because we're already going through housing problems right now. And now he's warning about something new. Let's see what validity there is behind this as well. D.R. Horton is the nation's biggest home builder with operations in just about all of the country. They have built communities around me as well, somewhat recently within the past few years. So they're not huge here in Pennsylvania, especially southeastern Pennsylvania, but they do have some developments here. And it sees a problem. In the fiscal fourth quarter, which ended September 30th, it closed sales of 23,647 homes, up 3.1% from the year earlier. Revenue was a different story, though. $10 billion, down 4.8% from a year earlier. Now, you might be thinking to yourself, who cares if a new home builder's revenue is down? I don't care about them. I just want to be able to sell my home and buy something and not have to pay an arm and a leg. Well, the revenue actually has a lot to do with the story, and I get like that a lot too. I'm like, I don't care what these big home builders are making. I don't care at all, right? Because they're giant conglomerations. That doesn't bother me, right? Because I'm just worried about my clients, right? And the vast majority, actually all of them, they don't care about what is going on with the nationwide home builders, right? That is the absolute least concern that they have when it comes to buying and selling homes, right? The least. So that matters a lot. So make sure you pay attention. That was mostly because Here we go. That was mostly because it often must offer incentives through interest rate buydowns to make a sale. That's very interesting. So if you think about it, these home builders are offering so many incentives right now for people to buy their homes. And why are they doing that? They have to do that because the cost of the homes are so dang expensive. And then the cost of mortgages are so dang expensive as well. So they're offering all kinds of crazy incentives just for people to buy their homes. A buy down involves paying additional funds up front to reduce the interest rates on mortgages, usually in the early years of the loan term, and the trend is not improving. Now, you might be thinking to yourself, I'm a seller, Shawn. Like, you're always giving me seller information, seller content. This is very important to what is happening in the market because the vast majority of people, as I always say, who sell a home have to buy a new home as well, right? And they either will buy new construction or a pre-existing home. So if you are a seller, it's very important to understand what is going on in the real estate market locally to you. And it's also important to have just a general understanding of what is happening nationwide, because you might be selling your home in Sarasota, Florida, and then you want to move to Dallas, Texas, and you're thinking about buying a new construction home there, right? But what is happening in that new construction market? Right? Because your buying power is going to be affected one way or another based on what you can sell your home for. Okay, so if you're selling at the top of the market and you're not taking a loss and you're actually making money, and then once you have that money that you made, that down payment money, the closing cost money, and then you're looking in a different state or maybe even the same state, maybe even you're moving a few miles away in the same school district, it's important to understand what your buying power is going to be, right? Because most people who sell their homes are going to be buying homes. So that's why this is important. That's why it's really, it's important to understand what is happening in the market, especially with new home builds and these bigger companies, because that is going to show you where the market potentially can go in 2025 and 2026. And the trend isn't improving. Mortgage rates had fallen from 8% in October to nearly 6% in mid-December as the financial markets expected the Federal Reserve to cut interest rates. So as you know, or maybe you don't know, the Federal Reserve has cut interest rates, and mortgage rates went down into the low sixes, and now they're back up where we stand today, December 5th, high sixes, but you can buy those rates down still. The Fed did cut rates in mid-September, which we know, and they've continued to do so. But bond yields have been rising ever since. Mortgage rates are again topping 7%. They're lower than that. This article came out a couple months ago. As a result, many buyers are waiting yet again for interest rates to drop. That forces a company like D.R. Horton, big and strong enough to operate its own mortgage business, to buy down rates, right? So this company and a lot of home builders are so large that they have their own mortgage business attached to the new home building business as well, right? So they act as a lender because they are a lender as well. We believe that the volatility of rates combined with the general uncertainty during the election season, a little bit less uncertainty now because we know what's happening, is causing some buyers to stay on the sides in near term. Chief Executive Paul Romanowski said on the company's annual conference call Tuesday. Again, this came out a couple months ago. So what's important to understand right now is there still is uncertainty with where rates are going to go. We have certainty around the election, right? But we have a lot of uncertainty still with where rates are going to go, because a lot of people are projecting, and I'm going to show you this later, but a lot of people are projecting that rates are going to go down, but now they're saying it's not going to go down as quickly as they thought before. And that is raising a lot of cause for concern, and home buyers are still on the sidelines. They're still waiting for rates to drop. And if you're in certain areas where you're selling your home and there's not that many buyers that are interested in buying your home because they're still waiting, that means your home is sitting on the market longer, which pushes back your timeline, right? Because if you're selling and you want to buy and you were wanting to buy something before the end of this year, to be in there before Christmas. A lot of people are waiting now and they're holding off. And home sales have already been at such lows since the mid 90s for total home sales, right? So the market is so volatile right now. It's up and it's down, and interest rates are dropping and then they're rising again. And we have the president-elect who's coming in, and we don't actually know what's going to happen immediately. And also there's no immediate effect, in my opinion, that can happen from a new presidential regime coming in. They can't just come in and just lower the rates out of nowhere, right? That just doesn't happen, right? So there's still a lot of uncertainty, even though there is a level of certainty. So D.R. Horton, this is really important, because it's not just D.R. Horton that does this. These are all the major home builders. Your Lennars and your Toll Brothers, they all do this as well. D.R. Horton is so big that its 93,660 closings during the fiscal year represents nearly 14%. This is insane. Of almost 1 out of every 7 of the total U.S. sales of new single-family homes. Some 80% of buyers financing their purchases through Horton used buy downs in the fourth quarter. Jessica Hansen, Senior Vice President of Communications, said on the conference call, that was up from 74% a year earlier and represents 63% of total sales. Now, this is really important. Bigger buy downs translate into more cost to Horton to get a sale to closing. And what happens when these big builders have to pay more in these buy downs? They make less money. So what does that mean for you, right? That means for you that when these big companies are making less money, they're going to be charging you that money somewhere down the road, right? They're going to do everything they can to make up that money. And how do they make up the money? They dump the prices of their properties, right? So these homes are not really going to go down anytime soon. These home values aren't going to go down anytime soon for the vast majority of the U.S. They're not going down. They're not set to go down anytime soon. So that has a lot to do with your future buying power after you sell your property. After you sell your property and you're thinking about, where am I going to go? I want to buy a new construction home. Well, there's certain areas, for the vast majority of the U.S., those prices are going to be where they're at, and they're probably going to go a little bit higher. And that's unfortunate, right? Because we're already paying so much for properties. We're already paying so much for home insurance, and we're already paying so much in interest. And now the values are going to continue to rise. That's really frustrating. That's very, very frustrating for a lot of people. And this absolutely has an effect on the selling market as well. As a result, D.R. Horton's gross profit margin narrowed to 23.6% from 2024. Again, who really cares? You're a billion-dollar company. And the company expects to spend more on buy downs in fiscal 2025 because interest rates are not falling. They're not falling as fast as they were hoping. And that assumes that it can get buyers to agree to these deals, right? So that's important. That's what I'm saying. Like, these buy downs are going to keep happening because they need to sell their product. So eventually they're going to start raising the prices on their product, and they're probably not going to get those prices. And then those homes are just going to sit on the market for much longer, and they're going to have to keep reducing and reducing and reducing and reducing. And when builders don't have incentive to build more properties, this is the issue, right? We're still dealing with the issues of builders not building enough properties from 2008 on. We're still dealing with that. That's why we're in this position now. That's not the only reason, but it is a huge reason why we're still in this position now with record low amounts of inventory. D.R. Horton has now pegged first quarter revenue at $6.8 billion to $7.3 billion, compared with the Wall Street estimate of $7.7. Full year guidance is $36 billion. And Wall Street has been looking at, who cares? This is another important piece of this article as well, and it goes along with the topic we're talking about. The result of this, D.R. Horton shares open on Tuesday at down 15%, right? They're because they're a publicly traded company, so their shares are down 15%. If a company as big as D.R. Horton sneezes, the other publicly traded home builders catch colds. That's why this is very important. The iShares U.S. Home Construct ETF, ITB was, I don't even know what any of that means. So Lennar was off, right? Pulte Group was off. Toll Brothers gave up. Okay. So again, this is what I'm saying. All of these bigger companies are now being affected. The ETF also includes home builders and suppliers like Home Depot, Lowe's, and paint manufacturer Sherwin-Williams. They were off more modestly than the builders. Okay. So all of this is saying that it's a very, very big struggle for a lot of these home builders to keep up with demand, which demand helps inventory supplies, and inventory supplies helps the real estate market. And when inventory supplies for the real estate market are as low as they are in the majority of the US, that means that values are going to continue to rise. But at the same time, buyer demand, where is the buyer demand? The buyer demand is strong, but so many buyers are still waiting for interest rates to go down, right? And again, a lot of sellers are going to be buyers. A lot of sellers are going to be buyers. So that means that if the new home market is affected like this, it's going to have a cascading downfall, in my opinion, on buyers moving forward into 2025 and 2026, unless something drastic changes, right? And the drasticness we need to see change moving forward is interest rates dropping, so homes can be, not the value of homes can be more affordable, but the payments for homes can be more affordable. And we need insurance rates to go down as well, but I don't really see how that's going to happen. I don't see how insurance rates are going to go down, right? And it's so expensive. I saw a lender who I really like in my area. He made a video, right, about how and this is going to affordability, right? This is why it's disgusting to me to buy a home in this market, right? The Fannie Mae conform loan, or what they're willing to loan on for a low percent down increase. That's essentially what it is. It's like conforming and non-conforming, which doesn't make sense. But essentially Fannie Mae, which is one of the largest mortgage-backed companies in the US through the federal government, they set a limit every year with where they're willing to accept a mortgage-backed loan from them with a low percent down, right? And I mean a low percent as 5%, as low as 5%. So they increased that limit to $840,000, right? And you might think to yourself, well, what does that mean? That means that if you qualify, you can buy an $840,000 home and only put 5% down. How many people actually qualify for that? For an $840,000 home in America right now? Think about that. How many people qualify for that? Not many. Not many at all. And think about this. And this is what I said to him. I was like, I can't imagine what your mortgage payment would be out of pocket every month if you bought an $840,000 home and only put 5% down. And I looked it up because I was intrigued, and it's about $5,000 a month. $5,000 for principal and interest. You got to equate taxes into there and insurance as well. So if it's like they keep increasing these limits, but who gives a crap? Why? First off, how many people can actually afford a $840,000 home? Not the vast majority of home buyers in America, not even close, right? You have to be in the upper echelon of salaries, right? You got to be making as a dual income home $200,000+, right? That's insane. And then you're going to be paying $5,200-$5,300 a month for housing for that home. That's insane, right? That's why we need mortgage rates to go down. That's one of the only things that can help in this market right now, is we need mortgage rates to go down, because if mortgage rates go down, that opens up so much of that buyer demand, and more sellers are going to be able to sell. And that's going to drive the market a little bit more, because we're in like a stalemate, right? And it's also the beginning of December, so it generally slows down this time of year anyway because of the holidays coming up. But we're in this stalemate right now because of unaffordability. Values are still continuing to go up, and interest rates are still high, and people are waiting for interest rates to go down. And there's still so many parts of the US that it's a more neutral market. It's not a large portion of the US, but if you think about some areas in the South and Florida and Texas, right, where month supply of inventory is 5 or 5.5 or even 6, right? You're in a neutral to a buyer's market. I just did a market update video for my county, Chester County, right? 45 minutes outside of Philadelphia. 1.9 months supply of inventory right now. 1.9 months. That is a very, very, very strong seller's market. Okay. That's a very strong seller's market. And the vast majority of the US is in that, 1.9, 2% or 2 month supply of inventory. It's still a strong seller's market. It still makes sense to sell your home if you don't have to move right away and buy another home, right? If you're selling your home right now in this market and you live in an area where it's going to sell quickly, and maybe you don't have to buy, or maybe you're thinking about renting for a little bit to wait for rates to come down, or you can take the money from the sale of your home, because, if you've owned your home for 5+ years, with home appreciation just in the past 5 years, it has skyrocketed, right? So you can sell your home. You're going to collect more equity, and you can take a portion of that and put it to the side for your down payment for when you're ready to buy. And then you can take a portion and put that towards rent for a good period of time. Or if you just have a good paying job and you can afford to rent, and then you can keep all of that down payment money for the down payment, and you don't have to really utilize any of that to rent, then you could potentially be in a better position. But how many people fall into that category, right? How many people actually fall into that category? It's not. The vast majority of people who want to buy a home are still first-time home buyers. And that is the biggest pool of buyers. And then you have the people who are selling and upsizing, or selling and downsizing. That's the other big pool of buyers as well, right? And how many people are stuck right now? There's a lot of people that are stuck because of what is happening in this market, right? And when you think about the new construction market, and you think about what this CEO is saying, because he's saying he is saying that the new problem that we're going to have, and he said we, right? And to me, that's a little bit misleading, especially from this article, because it says we, meaning like us as a nation. But he means we as in the new construction companies. They're going to have this problem, right? They're the ones that are in trouble right now because they have all this inventory and they have to utilize so many different buy downs, right? So for them, when they compare it to 2028, they're seeing it in terms of, or 2028, geez, I'm so far off, 2008, right? Because their homes were flying in 2008. They were over leveraged, but they were still flying pretty quick. I'm trying to bring up this this next article. So he's saying like, yeah, it's going to be worse in 2008. It's going to be worse. Yeah, it's going to be worse. And that might have an effect as well. That's going to have it might have a big effect. It might have a small effect. It might have a medium effect, or just who knows of what is going to happen moving forward in 2025, right? That's why whatever you're deciding to do, when you're thinking about listing your home, you have to have some kind of plan. Because some people are actually okay with selling their property. They have low interest rate, or maybe their house is paid off. There's like some 40% of people don't have a mortgage in the US. And that's even harder. If you're selling a property without a mortgage, And then you're potentially buying something. If you're not utilizing cash, because the people that generally have their homes paid off, they have more cash available. So if you're not buying home cash and you are financing it, you're going to finance at a higher interest rate. But if you're utilizing a very large chunk for a down payment, if you're selling an $850,000 house and you're buying a ranch, right? You're downsizing into a 500,000, and then you use 450 grand, or maybe you just pay cash, or you have a small mortgage. That's a different story. So everyone is in a different situation, right? And that's why it's hard to use blanket statements a lot, because everybody is in a different and unique situation, right? But all of this has an effect on the market, right? All of this has an effect on the market. Home building stocks tumble as largest builder finds this chilling trend. We touched on a little bit. D.R. Horton reported, and this was last month. So the other article came out about 2 months ago. So it continued to get a little bit worse for them. D.R. Horton was the worst performing stock in the S&P 500 a month ago, down more than 7% and off more than 6% for the week, despite paring some losses. This is while mortgage rates have decreased from their highs earlier this year, many potential home buyers expected rates to be lower. A lot of people did, and they didn't go that low. But home building stocks trigger sell signals. So this is what I really wanted to share with you guys, because this is really important. The news shook the home building industry group, making it one of the 5 worst performing groups over a month ago. Construction products, wood products, and other relative industry groups also were among the worst performing. So that's all important too, right? If you think about wood products, construction products, and other related groups to housing, to building homes, if they're all doing bad, what does that usually mean? If they're all doing bad, that usually means that they're going to start charging more. So things are going to start costing more money than they already are right now. If they're all if these signals are all saying that they're worse off than they have been, then the price of their products is going to go up. That means that the consumer is going to have to pay more. That means homes are going to cost more again. Building decks is going to cost more if you're thinking about doing things like that to improve your home, just even if it's just for your lifestyle, right? You want to renovate your kitchen, it's going to cost more. If you want to renovate the bathroom, it's going to cost more. If you want to get a new roof, it's going to cost more. So all of these things are going to cost more. As the DR Horton stock fell, sell signals were abundant in the home, and they mean sell signals in terms of their stocks. MI Homes fell further below its 50-day moving average. Toll Brothers Gap, they're down as well. And NVR gap between, so all of these signs are showing that something is happening currently in the new construction market, which will have an effect. It's just a matter of how much of an effect will it have on the real estate market in general, right? That's the question. And it's hard to understand, and it's hard to know exactly what's going to happen. And I'm going to talk about that coming up in a little bit, because there's new data out there, yes, and then there's new predictions for where the 2025 market is going to go. And I'm really excited to share this next part, because it's really going to help you understand what is going to be happening in the market. So if you have any questions on what I've already been talking about, because I know I'm blabbing. Oops, sorry about that. Let me know. Drop your comments below. Drop your questions below. This next part is going to... Where are we at? Sometimes it's always hard to find this. Here we go. No, man, I'm sharing the wrong one. Sorry about that. You think I'd be better off with technology at this point? What do I want? BAM housing market. No, not the Black Friday deal. Black Friday deals are old. Here we go. Here it is. All right. So the housing market predictions. Steal these charts. I'm stealing them and I'm sharing them with you guys right now. What does 2025 hold for the housing market? This is the golden question. The latest forecasts are in, and the numbers paint a complex picture for buyers, sellers, and real estate professionals alike. Realtor.com sees existing home sales increasing by just 1.5%, which will get us to about 4 million. Year over year, the lowest of all major forecasts, while NAR, National Association of Realtors, remains optimistic with the most bullish projection of 9% of a 9% increase. Of course, they're going to say that. They want to make more money. Duh. Follow the money. Meanwhile, price projections suggest growth, but just how much depends on who you ask. Wells Fargo leads with 4.9%, while others see more modest gains. 4.9%. We'll see. It's not out of the question, and to me, it's not really out of the ordinary, but it's very, very, very possible. In this post, we got our latest projections on home sales, price growth, inventory levels, and mortgage rates on an easy to read chart so you can reference. Here we go. Home sale forecasts for 2025. Hold on. Sometimes these things, they just never work the way you want them to. There we go. Is that going to work? There we go. Much, 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 much better. Realtor.com's 2025 forecast for existing home sales stands out at 4.0 million. Again, we are going to be less than 4 million for the entirety of 2024. The lowest of all analysts who've shared their updated projections for the coming year. Next up are Fannie Mae at 4.176 million and Wells Fargo at 4.187 million. Again, this is the total number of homes sold is important. It's important for you to understand because this is determining where we're at in the cycle. And it's seller's market, neutral market, buyer's market. That's all you have. Seller's market, neutral market, buyer's market. Generally, seller's market is low month supply of inventory. Like I mentioned already, for my area, it's 1.9. So if you go from 1 to 4, that's a seller's market. 4 to close to 6 would be a neutral. 4 to, I would say 4.5, low 4s up into the mid 5s is more of a neutral. And anything 6 and above, you're in a buyer's market, right? In my entire time being in real estate, since 2015, and then getting fully licensed as a real estate agent in 2016, I've only seen a very, very strong seller's market. Only seen that, right? And have seen the number of sales year after year rise and then fall, right? Post-COVID. Meanwhile, the National Association of Realtors offers a the most bullish forecast at 4.47 million, followed by Bright at 4.4 million, which is the main MLS system in the U.S. Or one of the biggest. I shouldn't say the main, one of the biggest. And Zillow at 4.3 million. So there you go. There's the chart from Realtor.com all the way up to NAR. Existing home sales forecast. Where are we going to be? I have no idea. I don't know. I wish I knew. I wish I had that crystal ball that I could share with you and say, this is where we're going to be. But it's impossible to know. It's impossible to guess. I mean, it's not impossible to guess. I can absolutely guess, but it's impossible to be certain. I would say that generally it will fall somewhere in the middle. That's probably the best guess of, 4.2, 4.25 million, which would be good. Because that would be, depending on where we end this year, an extra 250 to 300,000 homes sold. So that means that the market is starting to tick up a little bit in terms of inventory. So the areas that are these, pretty extreme sellers market, like where I'm at, maybe we'll get up to 2.5 months supply of inventory because we're really betting on interest rates going down to make it more affordable. Because when it's not affordable, that's when buyers are waiting. And there's a ton of buyers waiting, as you know, as we always talk about. So I would say that existing home sales will probably fall somewhere in the middle. somewhere in the middle, So whatever you're deciding to do, right? Whenever you're deciding to list your home, you can't go by this data nationally because it doesn't make sense. I don't go by national data when I'm talking to clients. I go by local data because that's what matters. That is the absolute most important thing. Look at things locally, but if you want to see trends and where things are trending, that's when you look at things nationally. Home price forecast. So this is important too, because when you're selling your home, you want to make sure that you're selling for the most money that you can. And home price forecasts are going to be a way for you to know where your home could potentially be worth in 3 months, 6 months, 9 months, 12 months. The absolute best way for you to know is to look at local data. But here is what they're saying about housing market predictions. Zillow forecasts 2.6% home value growth in 2025, while Realtor.com predicts 3.7%, consistent with growth trends since 2012. Wells Fargo is the most bullish, forecast with 4.9% annual growth in home values in 2025, while the Mortgage Bankers Association stands out as the most bearish of the analysts in the chart below with a forecasted annual growth of 1.5%. So just like the number of total home sales from the smaller amount to the larger amount, you're probably going to fall somewhere in the middle. Just like home value price forecast, that's going to be somewhere in the middle as well. So 3.5%, maybe 4%. Everyone's going to be different, right? Because this is an average. It's going to be average, but you can understand that, yes, your home, if it's in really good quality and it's not continuing to depreciate because you haven't been keeping up with it, but if if you have a nice home, quality home that doesn't need much work, it's in a good area, a desirable area where people want to live, then what you can sell for now might be different than what you can sell for in 6 months. And is that attractive to you? I don't know. If you have the ability to wait to put your home on the market, if you don't have a strong necessity, and I say this as a necessity, not a desire, it's a necessity to sell right now, and you can wait, maybe that's the right move for you. But again, this just goes back to what I say all the time. Everyone is in a different position. You might not be in a position where you need to sell right now. So if you can wait it out, there's a good chance that you can get more money for your home. But you need to understand this on the flip side, again, because 2/3 of sellers who sell their property will also be buyers. So even though you can get more for the sale of your home, you're going to be paying more for the home that you buy after you sell. And that's the trade-off. Well, with interest rates going down, hopefully, if they're in the upper sixes, maybe in June of 25, they're in the mid sixes. And then you can buy down below 5, or excuse me, into the upper 5s, not below. If you could buy down below 5, I'm sure a lot of people would do that as well. But there's always a trade-off, right? So if home values go up, that means you're selling for more, but you're also buying for more as well. And if you're older and you're selling for more and you're going into senior living, then you probably don't care, right? But if you're under the gun to sell, then that's a completely different story. So it all depends on where you're at. Inventory forecast for 2025. Analysts agree that housing inventory will continue to rise in 2025, with Housing Wire projecting annual growth of 13%, followed by Bright at 12.5% and Realtor.com at 11.5%. Housing inventory going up. So more homes will come on the market. More homes will come on the market this year. It's just a matter of how many will, right? And a lot of that has to do with interest rates. A significant portion of that has to do with interest rates and where interest rates are going to go. Well, I should say mortgage rates, or where mortgage rates are going to go. And that's what we're going to focus on next. Of the 9 analysts with updated mortgage rate forecasts for 2025, Housing Wire stands out with a projected range of 5.75% to 7.25%, averaging out to 6.5, which is the highest or most conservative average of all the forecasts in the chart below. NAR is forecasting the lowest average rate at 5.9%. That would be amazing. While Bright predicts an ambiguous above 6%, Zillow and Freddie Mac both expect a gradual decline in rates. Goldman Sachs predicts 6.1% rate for the end of 2025. Now, that's important because a lot of these people aren't saying that this is going to happen right as 2025 starts and the new presidential regime comes into power, right? This isn't going to happen right away. This is gradual. All of this is gradual. So it's going to go down. Hopefully the trend is that it continues to go down and it won't go up. That's what we're betting on. That it's going to continue to go down and not go up. Because I feel like we've been in that it's going to get worse before it gets better phase for a while. Especially as a real estate professional, right? I definitely have been saying that unfortunately things have to get worse before they get better. And I feel like we've been in the worst before it gets better for a long time now. Because when the total number of sales down, that means that most real estate agents' businesses have gone down as well. Most, right? Of course, there's always outliers, people that are doing well, that have done better than the previous years. That hasn't been the case for me, but things will start to get better. And I know that they will get better. It's just a matter of when and how much, right? So that's what you got to really think about. And it's always different for you in your specific situation, right? I can't say for certain what's going to make more sense for you because I don't know what is going on in your exact situation, right? And it's always going to be different. And that's why it's really important that no matter what you decide to do, no matter what, you have to have some kind of plan in place. It doesn't make sense to wing it when it comes to selling your home. It doesn't make sense to wing it because there's so many variables that can go wrong if you do that. If you're just like, I'm going to throw my home on the market and see what happens. What do you think is going to happen? Really? I'm in a strong seller. It's me, right? And I'm in Downingtown, Pennsylvania. I'm just going to put my home on the market. I don't know. I'm not going to look at any data. I'll just list it for 650,000 because that's what I want to get, right? People do that all the time. They may not even consult a real estate professional, whether it's an agent or a broker or an attorney or a title company at minimum. People do that all the time. I just want to see what I can get for my home. I'm just trying to see what I can get for my home. I think it's worth this, but I'm not actually doing the research to look into what the comps are. Oh, well, my neighbor actually, or this is kind of the worst. My neighbor sold for 550,000. Your neighbor's home is 1,000 square feet bigger than yours. What makes you think you can get $550,000 for a home that's 1,000 square feet smaller than your neighbor? You need to have a plan. Having a plan is going to help set you up for success. It's really that easy. It's really that easy. Now, a lot of people like to complicate things. I like to complicate things in life, but it's really that easy to just have a plan in place. When you have a plan in place, it's going to help you focus and stay connected to the ultimate goal. If you don't have a plan, if you don't have a goal, how are you going to know what to do and what you're striving for? If you're just going to put your home on the market and see what you can get, that almost never works and it never turns out in your favor. I can't imagine any situation or any person, any client that I had, past client or someone even that I just spoke to who said, yeah, I think this is a good idea. I'm just going to put my home on the market and see what happens. Is there outliers? Of course there is. Of course there's someone that just threw a for sale by owner sign in their yard and got $50,000. Of course, man. But do you think that happens to the majority of people? No, that does not happen to the majority of people. So if you are thinking about selling and you do need someone to help you put that plan into place, and you don't know where to start. That's always difficult, right? Where am I going to start? Who am I going to talk to? The best thing you can do is talk to a real estate professional, a real estate agent, or a real estate broker. Now, if you don't know any, which would be very odd because everyone seems to know like 6 real estate agents, it's important to work with one who really knows what they're talking about, though. Don't work with your cousin Sally if she hasn't sold a home in 2 years just because they're family. You're setting yourself up for for failure, right? So talk to someone who is a professional who's doing this on a consistent basis. And if you want me to help you to find an agent, all you got to do is click the link in the description. You schedule time with me. We'll talk 15, 20 minutes, however long. I'll find out what you want, what you need, connect you with the right person. I have connections now with people all over the US and Canada, which is awesome. Look forward to speaking with you guys. If you have any questions after this comes out, just drop them in the comment section below and I will get to them.